Today, I'm going to dive into the world of car financing and explore a very popular option known as novated leasing. In this guide, I plan to take you through what it is, how it works, what its benefits are, and what you should be considering before signing anything. So with the intro out of the way, let's get started with what the hell is novated leasing. It is a type of car financing where there is an arrangement between three parties. Number one is the employee, number two is the employer, and number three is a car leasing company or a finance company. And it allows employees to lease a vehicle of their choice using pre-tax income, making it a very attractive option for many, especially, I'm gonna caveat this here, I'm gonna say, pay attention here, especially high income earners. In the novated lease, the employee leases the vehicle from a finance company and the employer agrees to deduct the lease payments from the employee's salary before taxes are calculated, where the agreement effectively reduces the employee's taxable income, providing them with potential savings. The process begins with the employee selecting a vehicle of their choice and entering into a lease agreement with said financing company. Something worth noting that companies that offer novate leasing as part of one of their benefits or packages for working with them, they will often be working in partnership with a very specific company, which means you may be forced into signing up to one of these deals with them directly. You won't be able to go to whoever you want to go to. During this initial setup, the terms of the lease will be determined, which will include things like the residual value of the vehicle, as well as the lease period. Next, the employer gets involved and they enter into the lease agreement with the financing company. This basically means that the employer will take over the employee's obligations on that lease, where they'll be able to make payments on behalf of the employee, like I said, taking money from their salary, but it will be calculated pre-tax, basically as a business expense. The reason why novated leasing looks so appealing as well is the employer can also take out additional costs such as fuel, maintenance, and insurance costs too, to further reduce that employee's taxable income. Okay, so with the overview out of the way, let's take a look at some of the key benefits. Firstly, and this is the most common reason that people finance cars, they have a vehicle, they have access to it without needing to come up with a wad of cash to pay for it in one foul swoop. They literally get to pay very bare minimum for it over a period of time to enjoy its benefits for that period of time, which I guess translates to making it more manageable in terms of a cash flow perspective, where the costs are spread out over the period of the lease, making it a lot easier to justify spending that money because it's a lot less money coming out of their bank accounts than, like I said, that one big chunk paying it off in full. Number two, like I said just before, novated leasing provides potential tax benefits. Paying less tax can be a good thing if the purchase is justified. So this is definitely an attractive offer to lots of people in the high income earner bracket because they pay the most tax on their dollars earned. This is where I chime in because it's very important to say it out loud. You definitely should be consulting with someone who can do the math, if not a professional like an accountant, as one very simple example, to work out if the tax benefits or savings would be worthwhile entering into one of these agreements. And I'll talk a bit more about this in a moment, but it's my disclaimer that I got to put it here. Before signing anything, you should definitely be doing the math to work out if it's going to actually benefit you in the long run. I actually do have a follow-up video planned where I'll be going through the actual maths and some examples to calculate what examples would it be worthwhile being on a novate lease versus what examples would it definitely not be worthwhile. So definitely subscribe to the channel if you are interested in learning more about that so you don't miss the video when it comes out. I'll link it down in the description below. And the third potential benefit is that novated leases offer a lot of flexibility. At the end of the lease term, the employee has one of three options in most instances. They can actually pay out the remaining amount owed and buy the car so they own it outright. They can also return the vehicle and then start a new lease agreement to get a brand new car doing the exact same thing. Or number 3, they can extend their lease agreement so that they continue paying this car off for an extended period of time. So eventually, again, they will own the car, but they'll be able to finance it for a longer period of time. Again, helping them with that cash flow by not having to pay big balloon amounts to pay off a vehicle. This flexibility definitely allows people to adapt to their current circumstances, and it also helps them make decisions that will suit their needs. As someone who doesn't love financing because interest, it's not my favorite thing in the world, I'll put it out there. This flexibility is definitely something that is a consideration for many when looking at taking out a novated lease. Okay, now let's move on to the part that you really need to pay attention to. Let's take a look at the drawbacks of novated leasing. So firstly, if the employee leaves their job, or they retire, or they get fired and they no longer work for this employer, the agreement, being the novated lease agreement, will fall completely back onto them, meaning the responsibility of making lease payments will be on them and they lose the potential tax benefits. Number 2, there may be restrictions on the types of cars that they can have, as the company may only offer a select set of vehicles that might not align with what you actually want to lease. Employers definitely will have guidelines within the company of what they allow to be on the lease agreement as well. Some limitations might come into play, like things with fuel and maintenance and insurance costs. Realistically, it's an agreement that needs to be worked out, and what's on offer might not be the same everywhere. So make sure you read and see what limitations might actually affect you, because that will be factored in or need to be factored in when you do your calculations to see if it's going to be worthwhile you going through this process. And lastly, if you are definitely going to be financing a car, novated leasing isn't the only path. You can obviously finance through other means as well, and you should definitely be comparing those costs to make sure that you aren't just getting rorted by your company and you are going to get the best deal for the thing that you're going to be doing. A key takeaway definitely for this section and for the whole video in particular is that it's generally more cost effective to buy a car outright than ever entering into any financing agreement. I think that's common knowledge, but I'm going to say it nonetheless. It's something worth understanding. Ultimately, when you really crunch the numbers, it should become very clear as to which option is going to be best for you. And I can't possibly determine what that might be, because in my opinion, buy the car outright. If you can't afford it, you can't lease it. You can't afford it, don't do it. It's not worth it. But everyone's circumstances are different. And for some, the tax advantages may really truly be worthwhile. Companies may offer a really good deal. And if you're able to do that calculation and work out that it's the best decision for you, great. Then that's a pretty easy win, because you've done your due diligence. And then when you're driving in that brand new car, or that leased car per se, you should be not feeling guilty about it whatsoever, because you did the work up front to work out that it was going to be the best option for you. I'll basically leave you here by weighing up the pros and cons and doing your due diligence, like I just said, by doing a little bit of maths and working it all out in an Excel spreadsheet, because that's the fastest and most efficient way to do it. You should be able to come out of this decision with a yes, this is the right decision for me, or no, this is why it's definitely not, and basically have a happy ending irrespective of what you choose. Or you might not be able to buy a car and you might need to save a little bit more because you work out that that's the best path to take. That's pretty much the basics of novated leasing. I've done this overview and potential guide for you to understand what it is, how it works, what its pros and cons are. And in the next video that I release, like I said, it will be the number crunching aspect of this, so you can actually understand how to do that assessment yourself and what the specific, I'll drill down into the specifics, and it will be pretty dry, like I said, but it will be specific enough that you can actually go away and do the calculations yourself, and then get someone who's pretty maths savvy or techie to actually check that for you. That's where I'm going to leave you for today. If you enjoyed, please hit that like and subscribe button down below. Also, if you enjoyed how, it's a really boring topic, but I wanted to talk about it because I wanted to understand it a little bit more myself. So if you did enjoy it, I guess I'll see it in the analytics of the video, but I will leave you there. Have a good day, have a good week. And as always, I will see you in the next one. Bye for now.